All right, again, I've updated the room to where we can hold 500 people. So y'all can share this link with whoever you want. If you got teams, friends, anybody who wants to get on tonight, I don't care. We're doing it old school Forex and chill style, where anybody can join in and anybody can learn. I had planned on doing another session. And there's somebody messaging me. I'm trying to give them the link to join now. So but yeah, I had planned on doing another session and I've just gotten so busy. I've been sick. The grandkids have been sick. A lot going on in my personal life. You know, that just got the music ministry. It was Easter. Just a lot of stuff. But here we are. We're going to chart tonight. As someone was saying, we did do a 4-day boot camp where we went back to the basics. I feel like the reason a lot of people are still struggling is because they forget the basics when they start looking at the complicated stuff. But even when you're learning mathematics, or even when you're learning to write, if you become a technical writer and you start using the big fancy words, guess what? You still have to use the small words. You still have to use the a, and, for, the, and, but. Before you can even put together a well thought out thesis or a big document, you still have to use basic skills and basic knowledge. And a lot of people, they're skipping over the basics because they see everybody out here flexing, chart flexing. So I'm gonna do this one thing. Hold on one second. All right, I muted it, but you will be able to unmute at the end of the session and ask questions, or like if you have questions along the way. And the reason I do that is because I like nice, clean recordings. And I know a lot of people who teach, when they teach, if somebody stops and asks them a question, they'll lose their train of thought, and there might be something of value that they were going to deliver to you that now they forgot it. Because I've had that happen before. You know, you've been in the middle of saying something important to somebody and somebody interrupts you, like maybe your kid or your spouse or a coworker, and then you're like, I forgot what I was going to say. So tonight you're muted, but only temporarily. We love asking and answering questions. So good night, everybody. I see a lot of people jumping on from a lot of places, and I surely appreciate you. So looking at GJ, those of you who've been following my sessions the last few months, y'all know I was calling nothing but buys. We were expecting this order block to get taken. And I told you once it did, we were looking at like another 2,000 pip run out of there. So from here to where it currently is 900 pips. It could go 16 to here, just to that base candle, and 2,500 if it makes it up to this order block up here. So do not try to sell GJ. So what I'm going to do is I'm going to take 1 or 2 charts and I'm going to mark them down the simple, basic market structure way. Then we're going to go back and add in the complex stuff like the order blocks, the imbalances, and things like that. Because again, a lot of people, the reason they're getting screwed up in the market is they're forgetting the basics. They want to impress people. There's so many people out there that just want to drop their profits. They want to drop their charts. They want to show their entries. And at the end of the day, the market doesn't care, guys. And you're taking your focus off what really matters. You know, the most successful traders in the world, you don't even know they trade. And I said this on the session last week. There's somebody on my team who got a position working with a huge organization as an analyst, and he's in there with the market maker traders. And what he analyzes on a daily basis is moving the market. So when you see your students getting to that level, then you know you're on the right track of what you're teaching. And I said earlier, before a lot of people got on here, I believe everybody on here can become a funded trader. I believe you can become a successful 6- and 7-figure trader, but you got to remove the bad equation in this. And the bad equation in this is you. Until you become a master of one thing, you're not gonna make it, guys. You got to stop switching strategies every other week. You got to stop switching people that you follow every other week. How do I know? Because I did the same shit. When I started IML, I was with a different educator every week until I found one that the way he taught resonated with me and clicked with me, and I stopped watching everybody else. If you're trying to learn to speak Spanish, you're not going to leave Spanish class and go to a French class right afterwards. If you're trying to learn to be an optometrist, you're not going to leave there and go to dental school the next day. You have to focus on one thing and become a master of one thing. Market structure is the foundation that builds a solid house. It builds a solid house. ICT is the GOAT. I love him to death, but unless you know the basics, you're going to be confused and you're going to be lost. And that's the thing. He used the algebra and the trigonometry when people haven't even learned the 2 + 2 and the 5 divided by 2 and all that. People have not learned the basics, but they want to learn from the masters. You have to learn the basics. And so we're going to mark up a chart looking at the basics. And then we will implement the advanced stuff, because you can make a perfect marriage between the two. So when I first learned market structure, then I went and I started studying ICT. I was confused as hell. I went from making 5 figures a week to losing money because it scrambled my brain. It was something completely different than what I was used to. Did you know that people who have facial reconstruction, or like these people who have the face transplants, they will not let them see themselves immediately? It's a slow process. They're not allowed to look in mirrors because of the effect that it has on their brain, because of the information and the pictures that their brains have processed all of those years. Now, when they're looking into the mirror, it's something completely different. And when you're jumping from strategy to strategy, you're scrambling your brain, you're scrambling your outlook. You need to learn market structure so tight that when you start throwing in the Wyckoff or the smart money or the Elliott wave, that you don't get confused. You need to know English so tight that if you start learning Spanish, you don't forget your English. So we're going to, back to the basics. I've had so much feedback on that boot camp. It will be loaded to our new platform. I do have those videos. You won't have full access to those videos. A lot of people were upset that they couldn't get to watch those videos this week, but they will be loaded. So no worries. So we taught last week off of all USD, and we looked at how you could take market structure and tie in smart money and get huge moves. Like we got 1,000 pip move on the counter trend trade because we knew where we were in the market. So we're going to look at that again. Well, you know what? Let's look at another trade. Let's look at GU. I'll just pull a random market, a random trade. So we did the basic stuff, and the basic stuff is trend lines. Trend lines, support and resistance, that's the basic stuff, but it will help you figure out where you are in the market. Because if you don't know where you are in the market, you shouldn't be pulling the trigger. If you're pulling the trigger and you don't know where you are in the market, you're not a trader, you are a gambler, guys. We're not here to create gamblers. We're here to help you buy the house or the car that you want, or pay off the bills that you need to pay off. So you should be able to look at this chart and tell me, what is the monthly doing? We're not even going to market. Somebody tell me, what is the monthly doing on GU? Just drop it in the chat. Is it buying? Is it selling? Is it consolidating? We only care about the monthly. What is the monthly doing right now? Is it selling or is it pulling back? Or is it consolidating? Okay. So the way you figure out is you have to know your previous high and your previous low. And this is where a lot of people get stuck, because they don't know external structure versus internal structure, and they don't know the complex pullbacks. A lot of people get confused. Let me find Ro. I'm going to make you a co-host as well, so you can let people in, so I won't have to stop. All right, it's tax season for Miss Chelsea. I know she is busy. All right, so the only way you know if you're in a buy, a sell, or a consolidation is to know where your true high and low is and whether or not structure has been broken. So when this market was going up, you had a low. This is consolidation. If it doesn't break your 23, it's consolidation. It's not a pullback. Okay. It's just a pause. It's like they stop for a little break. So you got a low, a high, a higher low, higher high. This was your break of structure. So this now became a low, a high, and a low. Structure didn't break again until this was broken. So this became your lower high and your lower low. Okay. This is internal structure. This is internal structure, which means it's consolidating on the monthly. Does that make sense to everybody? Okay, let's look at it again. You had a high that broke a low and became a new low. So you had a high and a low. So since this high didn't get taken out yet, and this low didn't get taken out yet, what caused one of them to get taken out? This caused it to get taken out. So until this gets taken out, like down here is your low now. This is your high and your low. This would have to get taken out for this to be a lower high. Okay. This would have to get taken out for the high to be taken. So this is your playing field. Okay. Our monthly is to give us a playing field. This is the field where the monthly is playing. For those of you who know the advanced concepts, we don't buy until we see them do a liquidity grab on the sellers. So for on the monthly, for the institutional traders who don't look at 4 hour, 1 hour, they look at the monthly. This is where they're trading between this structure right here. This was an order block that they traded into where liquidity was. So there's liquidity here. This was a previous low. Somebody bought here. So guess what? People were willing to buy here. To make money, they have to kick somebody out. So they kicked out the instant buyers, ran liquidity, then they bought back up to this liquidity. It's okay, Andrew. Those true break of structures and true high and low confuse a lot of people because I was mistaught as well. Okay, Rebecca, we're not going to focus on liquidity right now. I probably shouldn't have brought it up, but that's why I wanted you guys to just give this a look and tell me whether it was buying, selling, or consolidating. Okay, so the true answer is it's consolidating on the monthly. The monthly is consolidating. We don't need any charts. This is where you need to be training your eyes to where you don't need anything on your charts but your eyes. All right, going down to the weekly. You can find structure on your weekly. And it doesn't have to line up with your monthly. Okay. So we see this took out this and made this. And this did this. Now this has come back into our weekly. And that's why you got an immediate sell-off, because it came up here into this order block and started selling off. You're getting support at this weekly order block, okay? Anything between your previous swing high and swing low is internal structure. Internal structure gets people hemmed up, okay? Internal structure gets people hemmed up. Complex pullbacks that are coming down to mitigate or retest get people hemmed up because people are on the lower time frame. So when I look at my monthly, I have an aerial view. I know some of you have never heard me teach before, so we're going to go through this. Okay, a lot of you know I spent time in Afghanistan. The base that I was on in Afghanistan, it was just a round road, and in the middle of the road was an airfield, where planes were taking off 24 hours a day. And this was our perimeter where we lived, okay? To do reconnaissance or surveillance, military will fly over so they can see everything that's happening, okay? They can tell from an aerial view everything that's happening. As they start coming in lower time frames, now the people that you couldn't see, you start seeing little figures on the ground. You start seeing like cars and buildings. Then you go down to like your daily and you start seeing a lot more. But guess what? Now you're so close to being boots on ground that you have no idea what's going on outside around you. Okay. Once you start zooming into these lower time frames, if there's an exit over here on the higher time frame, you don't know. If there's a perimeter here that's going to be broken on the higher time frame, you don't know. Why? Because you're focused on what's in front of you. Okay. I had to train at Camp Peary. And one thing they trained us at Camp Peary, if y'all don't know, that's where they train CIA agents. And I had to go there and learn and shoot my way out of some stuff. And you don't stand at a door and stick your head out to see what's there to protect yourself. Because guess what's going to happen? You're going to get hit. They showed us how to case the perimeter by backing up and seeing what was on the other side. And most of you are trading on these lower time frames and you have no idea what's going on your outer perimeter. So you're getting your heads busted. So that's why you need to always know what your monthly's doing. You need to always know what your weekly's doing. Why? Because when GU on the weekly gave us the impulsive move and made the low and the high, all other time frames had to sell in order to give us this flag or this correction or this complex pullback, whatever you call it. There's all kinds of names for these things out there. You just got to choose the one that makes sense to you. And so all you're seeing is on the 4 hour, 1 hour and daily, it's selling. So when it got down here to the weekly liquidity or order block, or some of you might call it a demand zone, you're still selling. And what do? They grab you, they hit your stop loss, and they take the market up. And this is also why a lot of people get trapped taking the small moves, because they're so focused on taking these little short-term sells that they miss this big 800 pip breakout, like what happened on GJ. Is this making sense for everybody? And this is why top-down analysis is so imperative. And this is why there are people making 6 and 7 figures with just market structure. Will smart money help you be better at your entries? Will it help you get stopped out less? Yes. Do you need it to make 6 and 7 figures? No. So until you figure out where you are in the market and what the market is doing, you don't need to be trying to figure out all this fancy stuff. You don't need to be jumping into the trigonometry until you get the basic math down. All right. So looking at the daily on GU, this is a perfect example of not really knowing what's going on the higher time frame. All right. So GU, looking at GU, just the daily. Forget everything you saw on the monthly. Forget everything you saw on the weekly. What is the daily doing? Is it in a buy or is it in a sell? It is definitely in a sell. We have clear structure on the daily that tells us that this market is selling. Excuse me. The thing is, if you're on a smaller computer, the only reason you can see zones to the left on my computer is because I'm on this huge thing. But like if you were seeing this before on a smaller screen size, looking left, you couldn't tell where you need to get out of the market. Okay. So that's why those higher time frames, now you know that your monthly is consolidating up here. Before any of this happened, it was still buying up on the daily. But if you hadn't zoomed out to a higher time frame, looking left, you don't know where in the hell is this thing going to sell off at. This thing looks awful bullish. It just shot up. Before this was a wick, it was a solid green buy candle. It was a big green candle just like this. Before that market sold off, what did it do? It grabbed liquidity. It induced you to keep buying. And then when it sold off, oh, here's a bullish engulfing. Here was a big move. It's going to buy here. It induced you to buy. And it took out your buys, induced you to sell. And it took your money from your sales. You started buying again, and then it sold off again. It started creating a complex pullback for a higher time frame, but you don't know that because you're not looking at your weekly and your monthly and realizing that the monthly is in a consolidation and that it has come to a fresh zone of liquidity that has never been tested. And so it's going to give you a reaction, okay? And plus this time frame needed that flag. It needed that correction. So that's why you have to pay attention to every single time frame and know what that time frame is doing so you can anticipate it, okay? Another thing is people get in the trades without waiting for the institutions to get in the trades first. I don't care how much money you got in your account right now, anybody on this call, if you got enough money to move the market, then I need you in my DM as soon as we hang up. We might trade institutional concepts, but we are not institutional traders, okay? So like right here, people were instantly selling, made a little bit of money. Then came the accumulation. They started getting confused. People were buying, people were selling, okay? If you wait and let them take out the liquidity, come back and mitigate, then you catch the move. If you wait, the waiting game is the most important game and the most profitable game in trading. If you learn the waiting game and you respect the waiting game, trust me, you will lose less money. Everybody wants to be a hero, call the tops and call the bottoms, but we don't have that kind of money. We really don't. Maybe one day we will, but right now we are still retail traders. Is this it? There you go. Forex is a transfer of wealth from the impatient to the patient. They like it when you get in the trade early. And if you don't have enough capital, they can shake you out by either hitting your stop loss or taking you so far in drawdown that your broker will hit it for you. It's called a margin call. Okay. Yep, it takes like $1 billion to move a pip. It really does. And we don't have that kind of money yet. Maybe one day we'll all have a hedge fund together and we can do that. But it's not today. But it's not saying we can't do it because I believe we can. But when you zone in here, this is where the patience comes in. This right here is where deals were being brokered by the big money. And if you pay attention within this consolidation or accumulation zone, there are nuances in here that will tell you what they're getting ready to do. I can tell you just by looking at this without even going to a lower time frame, they created a break of structure here, then they came in and mitigated. And if you had waited and pulled the trigger here, then you could have gotten a big trade with no drawdown. Okay, so let's take a look at that on the lower time frame. So again, people selling you the idea of the engulfing candles, they're going to cause you to lose some money. That's not what an order block is. An order block isn't always an engulfed candle, and all order blocks are not created the same. Some order blocks get instantly mitigated like this, which means they took the money instantly out. When this traded away because it failed to create a higher high and keep trading, that was your first clue that this was not a break. That was a failed rally. Whenever they come in and they throw money like this, okay, they created, oh, it's an engulfing candle, it's going to go high, trades back into it. When it traded away, guess what? All the way up until here, it was all green. Then they came and they took you out. Okay. If you wait for them to show their hand, you will make money. So let's go back to this. You had a low, a market traded higher. Here, they came into the liquidity of these equal lows. They did a liquidity grab, traded into here, failed rally. Okay. This right here, this move right here is where they started their sell-off. Okay. This was your liquidity grab, your internal break of structure. And then they started mitigating those positions here to take the market lower. And you do not have to even look at the lower time frame to see that. Once you start looking at just pure price action without anything on your charts and training your eyes, then you're going to learn the secrets of the people who are back there manipulating the market. So you had a low, a high, higher low, higher high. Here was their first little grab liquidity. They wanted to trade it higher. It was a failed rally. So now the sellers induced you to go higher. They stepped into the market, traded down, took this structure here, came in, mitigated this order block, and that's all she wrote. So let's look at it on a lower time frame. We're on the daily, so let's just look at the 4 hour. You learn to catch these moves up there. Look at this. Here we go. Now looking at it closer. Okay. Liquidity grab. Some people were thinking, oh, this is a bullish flag. Price is going to trade higher. There's your order block being created. Equal highs, liquidity grabs, your structures being broken. And then here is where you should be pulling the trigger for your sells. Okay. It never comes back in once it mitigates into this imbalance. Yes, you did have to go through some sideways price action, but they would give you multiple entries just on this time frame alone. Okay. So here the market traded higher, higher. Here they grabbed liquidity to try to trade higher. And now they induced you to trade higher. They came in and started breaking this structure here. All right. This is where all of your sales should have been taking place, right in here. All right. Excuse me again. I'm telling you guys, I am so sick. So let's see if we can find a breaker block on the lower time frame to where if you missed that move, you could have gotten in. So all of this right here, looking at it, can be very confusing. That's why you have to have a higher time frame narrative. The higher time frame lays out a narrative. We all know a narrative or a narrator tells you what's happening in a story. Learn to read the narrative. The higher time frame writes the book. The lower time frame, let's say your monthly is like the whole book. When you go down to your weekly, now you're going to see the outline. It's telling you the outline of the book of what's happening. You go down to your daily, you're getting to the pages of the book. You go down to your 4 hour, you're looking at the paragraphs. You look at the 1 hour, you're looking at the sentences. When you start getting down to like your 5 minute and 1 minute, now you're looking at periods and punctuations and words. So you need to learn the book from the outside, scaling in. And then when you figure out what they're doing from the outside scaling in, now you come to the internal structure, the lower time frames. And this is where you pull the trigger. You wait and let them write the narrative and tell you exactly what they're doing. All right. So here we had that high descending channel, came into an order block, gave you one last rally up, came and accumulated around this zone, started accumulating again here. Everybody was still buying here. Probably had some people trying to buy here. That was your liquidity grab. Okay. Failed rally out of here, broke this structure, came in and mitigated. All right. Now you start seeing the exhaustion here. Here you had another break of structure. So you've had 1, 2, 3 breaks of structure inside that big daily zone that you couldn't see that. Okay. So the lower time frame is starting to give you the secrets of what's going on. This is the computer algorithm fulfilling the orders on the smaller time frame, accumulating the orders by the higher time frame players, closing buys, closing shorts, doing their bidding like they do at the trading desk. There are trading desks. Okay, so you had an ascending channel. This was a beautiful, beautiful reversal pattern. Okay, you see this ascending channel coming in here. So let's see how you could have capitalized on that. Okay, so let me show you guys something. They start telling on themselves. They took out this order block here. They came back into this one with a reversal pattern. This order block broke an internal structure low on the lower time frame, came in and got mitigated. You could have entered there. And we're just down to the 1 hour, right? Your stop loss could have just been right above here. It wouldn't have been a lot. Okay, so if you entered off this order block, your stop loss right there, 8.5 pips. Give 2 pips for spread. You could have taken a 10 pip entry. And just on this alone, on this small move, we know it went much lower. You got 195. So now you're almost, what? What's the R&R on that? My math ain't working tonight. So let's say we entered off that order block because we were reading the nuances. Just this little move here. Okay, because we hadn't looked at the higher time frame where it's going. You got a 16-to-1 risk to reward. 16-to-1, guys. Do you know what that can do on a funded account? But we know when we get a 1 hour break of structure, we can trade 2 hour, 4 hour POI. Where's your 4 hour liquidity? Your 4 hour liquidity is way down here. And we got liquidity to the downside on the 4 hour. And look where we got a reaction. If you get a break on your 1 hour, trade it down to your 4 hour POI. There was liquidity sitting here. They traded right down, snatched that liquidity, instant pullback. All right. So I'll revisit the patterns because I still use the retail patterns to tell me what the market is doing. Then I use the liquidity of the smart money to tell me where to expect it to react. Just like here, I saw a retail pattern telling me that it was going to sell. And I look at my 4 hour for where I can get out of the market. Okay. Did I take this trade? No. I've just been trading like US 30 and gold. So I'm just analyzing this to show you that even if you didn't catch the move, you should still be able to cut the market off anywhere and pay attention to these nuances and see what the market is doing. And this is called back testing. Then when you do it live, like where you see these moves and like you put this here and call it to go down here and it plays out, that's forward testing. So once you become real versed at back testing, you need to start forward testing. And even if you're not trading live, you need to be taking your trades in demo. That's the only way you're going to build your confidence and your skill set. Okay. Even when nurses go to medical school, they have to start practicing on dummies. Then they have to go to clinicals and start practicing on real people under the guidance of someone else. So you have to practice in demo. Demo will secure your skills. It will solidify your skills. But the most important thing it will do is give you confidence. It will work on your mindset. The only difference between a demo account and a live account is your mindset switches because you start getting nervous because now it's real money and you feel under pressure to perform. A lot of people who call signals, they feel under pressure to perform. And even though they can trade well on their own live accounts, sometimes they call bad trades because they feel like, well, the people who are paying me, they want a signal, they need a signal, which reminds me, I need to send a message to the signal guy because I think last week he was calling some bad calls because he felt under pressure to perform because he had lost the trade. Never feel under pressure to go back and perform because you've lost a trade. That's when you need to step back and assess. Okay. Is all this making sense to everyone? So what I do and what I teach people to do is use Google, because Google is your friend. So you can look up Forex continuation patterns, and you can do this little thing called click on images, and all these nice little patterns come up. And what we saw happening was this right here. And it came into an order block and it broke structure. And when it retested, you should have pulled the trigger. Okay. So these patterns, when the market makes a bullish flag, it pulls back into like an imbalance or an order block. So that's why I tell you guys, you need to learn these patterns first before you even try and worry about ICT and all these other people teaching smart money. ICT is the GOAT. Everybody knows I shout him out. If it wasn't for him, I wouldn't know about smart money. But you need to learn the building blocks. These building blocks are going to help you know where you are in the market and what it is doing. Then you go back over here to the market and you find that liquidity, and it tells you where that pattern is going to stop, where it's going to react to. Perfect example was last week on GA. Excuse this, I was teaching. So let's go to the 1 hour on GA. I was able to use this pattern and catch a big move. Let me just hide some of this stuff. I use this pattern and liquidity to catch a huge move on GA. So you can combine smart money with market structure. People out here arguing over, oh, well, you're not really an institutional trader because you got trend lines on your chart. Okay, baby, I'm funded. I'm paying my bills. I really don't care what you have to say or what you think about my charts. My charts are my language, my handwriting to myself. Your charts are your handwriting, your language to yourself, and they should make sense to you. Okay, when a doctor writes a prescription, he knows how to read it. Pharmacist knows how to read it. It doesn't matter if you know how to read it. It gets the job done. It accomplishes the missions. Okay. Just hide some of this stuff. And this is going to be a perfect example. I saw this pattern being formed and I had my bias. So I was able to catch this trade. Okay. Just traded it back to the top of the flag. You had an expanding flag pattern that came back into an order block that had created a break of structure and left behind liquidity. A high probability order block will do 3 things. What are those 3 things? Well, if I can hit the right thing, guys, excuse me again, I am sick. My eyes hurt from being on the computer all day. A high probability order block will do a few things. It will leave a break of structure, it will leave imbalance, and it will take out an opposing order block. That means it has liquidity sitting there that needs to be mitigated. So on this lower time frame, I had an order block. My liquidity had been grabbed. An order block created a break of structure. And when it got mitigated, I simply pulled the trigger. Where did I go to? I knew it needed to go to my next high, take out liquidity. So I traded it back up to the high. So I combined market structure with smart money. Okay. If y'all see this crazy stuff, it's from a boot camp I was teaching last week. But hopefully some of this is making sense. Okay. Is this making sense to you guys? So to you that were in the academy, I still have the boot camp and you'll be able to access it in a few days. It's being uploaded. And the reason I called it back to the basics is because a lot of you are lost because you're trying to get ahead of yourselves. How do I know? Because I've tried to get fancy myself and got my ass busted. Okay. Sometimes we get grown and try and show off, and we get fancy and get our heads busted. But y'all see this ascending channel going into that order block. If y'all see an ascending channel, which is a reversal pattern going into an order block, that's your money shot. All right. That's your money shot right there. And that's not even the one we were looking at later. Y'all see this? Let me show you something. GBP pairs make this a lot. Making an ascending channel here, had an order block that broke internal structure on a lower time frame, got mitigated and immediately sold off. Okay. Let me find a descending channel. So just like you guys can see that there are Forex continuation patterns, guess what? There are Forex reversal patterns. And it's not a candle. It's none of that. It's like an actual pattern, okay, that it forms. As with any trade, you need to wait until liquidity has been grabbed. For my trading confirmations, when I have my best trading days is when I'm patient and I don't chase the trade and I wait for these rules. Where is it? That's not that one. Where is it? My confirmations. I got so much stuff I've put on here over the years. That ain't it either. Y'all can tell I teach a lot. That's not it either. I guess I've created this like, here you go. Has all liquidity been taken? So has liquidity been taken? Is there a breaker structure? Wait for the retest, and you want to have at least a 1 to 2 risk to reward. Why? Okay. Because if you are a trader who only wins 50% of your trades, if you can hit at a 2 to 1, you can grow your account by 5% a week. Okay, 2 weeks of this and you're funded. Make it make sense, Mama G. Okay, I will. I heard you. I'll make it make sense for you. Okay. We got a nice vertical line here. We're going to make this make sense. How are people getting funded, Mama G, and they only win half of their trades? Well, because they work on risk management and trade management. Okay. Another line right here. Make it bigger. All right. So let's say you take 10 trades. 10 trades. You got wins and you got losses. You lose 5, you win 5. You're risking 1% per trade. If you're trading at a 1 risk to reward, you've lost 5%. You made 5%. At the end of the week, you are break even. Guess what? You are a freaking good trader, because most traders cannot end the week without losing money. You have done a phenomenal job. You have protected your account, and that is your number one job as a trader, is to protect your money at all times. If you walk away with the same amount of money that you started the week with, you've beat out most of the people out there trading. There's my money coach. My money coach is on the line. I'm gonna let him speak before I finish. All right. So, all right, let me do this back. We're talking about risk to reward. All right. So now let's bump up those odds. You become a person who can get a 2R. So now you've lost 5%, but guess what? You made 10%. At the end of the week, you're up 5%. You're halfway funded. Or if you've passed the challenge, you just got verified. Now, to hit 6 figures quick, especially if you get funded, all you need is a 3R. You never lose more than 5% because you are disciplined and you are only trading 1%. Guys, we're not talking about your personal account. If you want to go 2% on your personal account, go right ahead. We're talking about getting funded and trading millions of dollars for other people who don't want you to play with their money. Okay, so now if you get that 3R, guess what? You're up 15% for the week on wins, and you're down 5%. Guess what you just did for the week? 10%. You got $400,000 with FTMO. You've made 40K for the week. They're going to give you 80% of that. They pay out every 2 weeks. So why are you not happy getting a 3R, risking 1% if you can get 80% of $40,000? Why do we preach to you about risk management? This is why. Because even if you are what some people call a shitty trader because you lose half of your trades, you're still making big money. Professional baseball players. Everybody say risk management in the chat. Professional baseball players only have to bat 40% to be multimillionaires. You only have to bat 50% to be multimillionaires. So start forward testing, start back testing, start taking your trades in demo. If I'm gonna let Money Coach tell the rest of this sermon, but if you know what you're losing going straight out the gate, you ain't gonna be sitting over there crying in the corner and when your stop loss gets hit, because you made a calculated and a predetermined risk. So I'm gonna find Money Coach and I'm gonna make him co-host and I'm gonna let him say a few things because he's gonna be teaching risk management on our new platform. And the way he teaches risk management is why we have so many funded traders who are only batting 50 and 60%. I scrolled all the way past your name, Jesus. You all the way at the top, and I'm all the way at the bottom. Give me just a minute. Y'all know I'm sick and I'm on meds. I ain't gonna say what kind of meds. Let me make one more thing before I turn it over to him. Now just imagine when you start batting 60 and 70. And just like Justin the other day, he batted 88 on his FTMO. He batted an 88%. Some of you have even batted 100% on your FTMO. Now take those odds and turn them into ROI. All right. So that's it for me. I'm going to let Coach Chris say a few things and we'll call it a night and I will post the recording.
I just need you guys to drop some ones for Gigi for what she's doing. I'm telling you guys, she is the GIZOAT. I'm telling you guys, she the GOAT. I'm telling you guys, it amazes. I have seen her do this for 3 years and it never ceases to amaze me. She explains things. She's gifted. Like I'm gifted with risk management. She's gifted with teaching people how to see the market. It is unreal, man. Throw those ones on there. I'm super GOAT. Ones, throw the ones on there. Throw them on there. Throw them on there. I mean, throw them on the wall like they wet tissue. Throw it. Throw the ones. Throw them like they dollars in the strip club. I'm telling you.
Why you gotta say wet tissue when I'm over here coughing and blowing my nose?
Man, look, I absolutely love Gigi. I love what she's doing. I'm telling you, there's only a few people that I know that are really want to help people win. It's only a few, especially in this trading game. And I'm telling you, there are only a few people that are unselfish enough that really want to see other people win. That's why I respect ICT so much, who is one of Gigi's mentors, you know, one of my mentors. He's just a godfather in the industry. He's your mentor, whether you know it or not. Anytime you say the word smart money, you're using his terminology. So he's a person that teaches people because he wants to see people win. Gigi is the same. And I'm really just grateful to just be close to somebody like that. You know, I'm excited about the new things that are happening on the horizon. She's finally taking the steering wheel and just driving it till the wheels fall off. She asked me to write a a bio about myself, I started thinking about it. You know, every profitable trader, and this is just the truth, has to master trade management and risk management. And risk management is a practice. It is something that you have. Gigi has to practice risk management even today, as great as she is. Every profitable trader has to practice. I want you to put that word in the chat, practice. That's the one I want you guys to focus on. You have to practice. It is an act. You have to practice risk management. The people who are not typing the word practice in, they don't understand the importance of the word risk management. Anybody that has ever taken FTMO, has taken the challenge, has passed it, on the literal certificate, the words risk management are literally on your certificate. You have to practice risk management. You have to practice risk management. I'm not saying it over and over again. Please, G, show it. Show it to them. Show them where it says risk management. Absolutely. Highlight it. It says it right there, risk management on the certificate. Anybody who has a certificate on yours, hers, mine, it says risk management. You have to practice risk management. And I'm grateful that I will be teaching and highlighting, and not just teaching new people what risk management is. All of us always can stand a refresher on risk management. I talked to Gigi about risk management. I talked to our friend Neil about risk management. Chelsea has to practice risk management. Jay Do, whoever, everybody has to practice. Even ICT has to practice risk management. And so I'm grateful to be a part of this and just share with you the way that God has given it to me, to make it be fun, to make it be important, so that we can say, okay, you know what? This stuff really, really works. Because people who stop blowing accounts practice risk management. That's how you stop blowing accounts. Because when you go into the market already saying, I'm willing to lose this much, it takes the sting out of losing. If I have $1,000 and I'm only going to lose $1, that doesn't hurt my feelings. But when you have $1,000 and you lose 950 of it, oh yeah, you hurt. So how do I stop from blowing accounts? You have to, there's that word again, practice risk management. And if you're really, ready to take your trading to the next level, you have to be attached to that thing that is going to help you grow as a trader. Trust me, stick with Gigi, as all of us have. Some of us have been with her for years. Some of you are new, just weeks. Some of you are just days. But trust me, this is where you want to be. I'm grateful. I look forward to helping you guys learn, perfect, and practice risk management. G, I appreciate you. I love you. It's time for me to eat.
Thank you, Coach. He's a personal trainer and a money trainer. All right, anybody? Yeah, drop those $signs for money, Coach. Because he is the one who showed everybody to take proper risk management and flip those accounts. Y'all see what I'm seeing here? Y'all see how the GU had this accumulation, manipulation, distribution? That's another thing. If y'all haven't started paying attention to yet, accumulation, manipulation, distribution. Actually, you could have got in a real good buy down here. After they did the manipulation, there was a break of structure, a retest on a lower time frame. Let's look at that. Trying to see how that thing gonna act when it come back. People have been looking to sell this. Let's look at that structure. This is when you got to trust the process. They had the manipulation. They ran the liquidity, and broke structure. All that imbalance down there. Look at that. Yep. They came in here. This little piggy came into some imbalance down here. Did another internal breaker structure, retested and took off. That was a beautiful play. And look what they did. Here's the 15-minute view. The liquidity grab. All right, imbalance, took out an opposing order block, broke the structure, traded back into it, and the market took off. That would have been a beautiful play. Beautiful play. If you missed that retest, the market did a rally, base, rally, base, rally, base, rally. They give you a couple opportunities to get in there. All right. I'm done for the night. Anybody got any questions? I made it to where you guys can unmute if you got any questions. I want y'all to look at this: accumulation, manipulation, distribution. AMD all day long. Any questions from anybody? All right, no questions. I thank you all for jumping on.
Yeah, I got a question.
Yo, what's your question, Dallas?
Yeah, can you show us what an order block looks like, a candle?
Okay. Excuse me. Okay, so there are various types of liquidity in the market, and the market makers move off of liquidity. Liquidity is money that they can grab. Just think of liquidity as gas. And in order for a car to drive off, it needs gas in the engine. So when you'll see sometimes they'll hit a specific candle. Okay. It all comes down to a candle that holds the gas to push the market where it's going. And what the market does is, if they want to create a sell, they need to create demand. So to make something in demand, they start buying it up. When they buy it up and then aggressively sell it off, the same people who sold it off are the ones who created the demand by putting a block of buy orders. So that block of buy orders is now a bearish order block. Even though it is a bullish candle, it is a bearish order block, because these buyers, let's just say they're trading with 100 million in capital. They're going to throw about 20% of that, or 20 million, into buy orders to manipulate the market, induce other people, because in order to make money selling, they need to trick other people to buy. So they would throw in $20 million in buys, entice or induce people. I call it seduce. They're going to seduce you to start buying, and then they're going to aggressively sell off with the remaining 80 million. Now, to lessen the damages, mitigation means lessen the damages of. To lessen the damages, they trade back by a corrective pattern as close as they can get to that block of orders that they've left off, to close it out, to lessen their damages, but to also keep the people that they trap and took their money trapped so they can continue selling off. Okay, does that make sense before I actually find one?
Yeah.
Okay, and they do the opposite when they're getting ready to buy. To buy the market, they need to trick you, fool you, entice you, induce you, and seduce you to sell. Okay, so like right here, they threw in a sell so they could buy the market up. Because if they want to make money on something, they want to buy it as low as they can get it. Okay, and they got to kick out. To get a willing buyer, you have to need a willing seller. So they trick you to be willing to sell. Oh my God, it made a lower low. It made a sell. It made a bearish engulfing candle, and it broke structure and it made a lower low. So everybody starts selling, chasing that market. And what do? They reverse it. And now you're trapped down here, and they're not going to come back to let you out. Okay, so these black candles would be considered a bearish order block. A bullish order block, because it was to induce sellers, but to trap you. Okay, when you have a small one, you can put the two together because it's probably one on a higher time frame. Now, how could you have known not to chase these sales? By knowing what your higher time frame was doing and anticipating the buy. And knowing that before they buy, they sell off enough to hit stop losses. Why? Because, oh my God, here is a demand zone. My mentor told me that if they bought here and they bought here, when it comes back, I need to be ready. I'm gonna buy right here when it comes back. And so we get screwed and they hit our stop losses. Not only did they hit your buy stop loss, then they triggered the sellers. And now, not only did they take the seller's money, they took the buyer's money. And they lived happily ever after because they got their orders injected into the market. What do we see happen after they make a big infusion into the market? We see price start tapering off. Some people are thinking, oh, it's making higher highs and higher lows. It's going higher. What do? They come into a previous order block. Okay. People are sitting here waiting to sell. Why? Because again, it broke structure, made a lower low. What do? They run the liquidity on that, break structure, trade back in to this breaker block here and trade off. So now everybody's confused. Are they buying or are they selling? Well, they just showed you here what they want to do. They infused their money into the market. Now they're probably coming down to take some of their trapped liquidity out and buy higher. That makes sense?
Yeah, makes sense.
All right, so an order block is where they placed a position to hedge against it. In layman's term, they placed a position to hedge against it. Looking at the lower time frame order blocks, you can get some small scalps, some good clean moves, some sniper entries. But if you're not aware of where you are on the higher time frame, you can get caught up because you don't know if their overall intention is to buy or to sell. Now here, on the higher time frame, they ran some liquidity. Then an internal breaker structure came right up to this order block, mitigated it, induced people. See, people automatically sold here. So what did they have to do? They had to trade above it. So price action on the 4 hour is going to lie between these two order blocks. You need to wait and see if this gets respected. You can go down to your lower time frame, like a 1 minute or 5 minute, and wait for a 5 minute breaker structure, retest, and then pull your trigger. If it fails to create a higher high and starts coming back for this zone, they're going to run it. And that's how the order blocks work. It's all about tricking you into not knowing whether to buy or sell, and also about making better prices for them. Here, they needed to run price up. All of this wick was a buy candle. This was a buy candle. So they bought and then boom. Now their position is held here. They came back to get their money. Their whole mission for coming back into this zone was to get that money that they left behind. So now they've hedged the market. They bought here to sell and they sold here to buy, and they've secured and mitigated all their positions except this one here. So we'll see how they behave when they come back to this money. If there's something on a higher time frame, higher than the 4 hour that they want to go after, they will go after it, because a daily is 6 times more powerful than your 4 hour, because it takes 4 of these to make one of these. And if there's something on the weekly and this is a daily zone, then they'll come down after the weekly because it takes 5 of these to make one of these. So you have to make sure that all scenarios on the higher time frame are lining up. Okay. All right, everybody. Anybody else?
So
I have a question.
Yes, ma'am.
Good night. You mentioned earlier that for a high probability order block, there are 3 things: breakup structure, if it leaves an imbalance, and the third thing I didn't get at all. If you don't mind repeating it.
Somebody in the chat's going to tell you, because I always test them like this. Somebody tell her, because I know somebody knows, because y'all been on enough of my sessions. What makes a high probability order block? And the reason I do this is so it puts it in their head and it puts it in yours. I believe that if I show you the answer, you're more likely to forget, but if you have to look for the answer, you're more likely to remember. So that's why I'm making them say out the answer. So now they'll always remember it. So they just told you in the chat.
Awesome.
It
Thank you
will,
so much.
it will create a breaker structure, leave an imbalance, and also take out an opposing position. So it will take out, like if it's to buy up, you want it to take out where there was a seller that had their sell position here. You want it to blast through them, take them out, leave some imbalance or order block here that needs to be mitigated, and boom. All right,
Awesome.
that makes sense?
It does. Thank you so much and feel better soon.
Thank you. Oh, this is the first time I've been able to talk in days. Thank God. Anybody else?
Yes. So what is a breaker block, Gigi? Could you explain that? I get it confused.
Sorry, I had to mute and cough. So a breaker block is an order block to the upside that was holding up structure that later when it comes down, it got taken out. So now they got money here that they need to come up and mitigate, and you can get a second entry. So it would be like a bullish order block that price traded through that now became a bearish entry. They're good for entries. When a zone structure gets broken, okay, price is trading up, got an order block, price trading up, got an order block, price is trading up, boom, it breaks that order block, creates a lower low, boom, and boom. It also looks like what? A Quasimodo. This is a bullish order block because it's pushing price higher. It breaks through, it trades into it, mitigates, and goes down. It created that breaker structure. It could also look like going up, bearish order block, up, bearish order block, failed to break structure, traded through, came into it. That makes sense? That's why a lot of times people will be waiting for this to get mitigated and it doesn't, because they come back for that. Yeah, like Taylor said, through and two. Right? That answer your question?
Yes.
All right, anybody else? All right, guys, I appreciate y'all. I'm gonna take a little break. Been a long day. Now we'll load this to YouTube and post the link. I appreciate y'all. Have a good evening. Forex and chill for life. Love you guys. Bye.